What is going on? So there is more change and disruption in this real estate market here in San Diego than I think we've seen in the last 10 years or so. So the question is, are we in a housing bubble and did it just pop? I'm really interested to chat with you guys about this. As always, tune in. Let us know where you are tuning in from. Throw a comment down below, and I'm going to pull in our guest today, Mr. Bern McGovern. Oh, I like that a little bit better. How you doing today, Bern?
You're doing well, Dan. Thanks for having me on, man. Always nice to visit each other's channels every now and then.
For sure. So if anyone's watching, make sure if you haven't already subscribed to Bern's channel that is Living in San Diego with Bern and Courtney. And his videos are, I would say, second best videos about San Diego.
Yeah, Jaycation first.
Yeah,
So.
Jaycation is probably number one. So yeah, nice work over there, Bern.
Thanks, Dan. Appreciate it. Thanks for having me.
Yeah, absolutely. All right. So let's see. Ricardo coming in from Imperial Beach. Nice.
Nice.
How is it down there? I know we've had, I at least read some articles recently about a bunch of beach closures. Is that what you are experiencing? Have you been going to the beach? Has it been as bad as they're saying? I really like that area a lot, but that is definitely a challenge with that area.
Yeah, I don't get down there as much as I would like, but yeah, I've definitely heard some problems going down there as far as beach closures. So hopefully they get that all resolved.
Yeah, absolutely. All right. So we are going to start here by doing what we always do is start off with a couple of different articles that we can chat about. And we're going to start with this one here, which I thought was pretty interesting.
I saw that one.
Saw this.
I saw that article.
So the San Diego Union Tribune says San Diego has a bigger percentage of $1 million homes than New York City. As always, they're going to try and make that title sound as juicy as possible. It is still pretty interesting when you start digging into it. So they're talking about the percentage of homes, San Diego County versus New York Metro. So basically what they're saying is San Diego has the third highest percentage of $1 million homes. Number one would be San Jose, which is close to Silicon Valley. Oh, no, I'm sorry. We're number 4. So San Jose, and then you have San Francisco, and then you have LA, and then you have San Diego that is down at, I think, 13.5%, which is higher than the nationwide average, which is 4.71% of homes are $1 million or more. How do you feel about those numbers, Bern?
I mean, I feel like it's probably pretty. I'm actually surprised about the New York part of it. But like as far as LA and San Francisco, I mean, what's the median home price here for at least for single families? It's up close to $1 million. Although maybe that's starting to decrease a little bit here in the last 30, 45 days or so.
Yeah, if I'm being honest, I thought we'd be higher than 13.5% for $1 million homes. But I guess if you're including every single neighborhood, if you're including condos, townhomes, single family homes.
So this is just San Diego City or is this San Diego County?
County. It's also including, it's going to go a lot farther east out into like Ramona and places like that as well. So yeah, I guess that makes sense when you really break it down.
Yeah. It's not tremendously surprising the way the prices have gone up here in the last year or 2 years, I guess, really.
Absolutely. And it's also very interesting to look at. So San Francisco, 40.4%. San Jose, 52.9% of homes are over $1 million, which is just absolutely wild.
So we're not even close to those ones, basically.
Exactly. Yeah. It's really interesting when you break it down. And then if you actually look at the numbers, so New York, and again, this is New York Metro, so I'm not sure exactly if it's just the city or if it expands out a little bit past the city, but New York Metro has 383,000 homes that are over $1 million compared to San Diego County that has only 82,000 homes over $1 million. So they actually have significantly more when you look at volume, but when you look at percentage, we're going to beat them out. So much higher population over there.
Yeah, there are also a lot more condos and that sort of thing. Yeah. More densely populated than we are, obviously, here in San Diego.
Yeah, absolutely. All right. Who else do we have commenting over here? Ricardo. So Ricardo, we asked him about the beaches in Imperial Beach. It's changing. Lots of businesses coming in. The water could be better, but not a showstopper. That's really, really good to hear.
Yeah. I've not done a video on Imperial Beach, but I'm working my way down. I just did Mission Beach today. So
cool.
On that. So I think probably next week we'll probably have that one out. So
Was it just absolutely bonkers crazy at Mission Beach today?
It was busy. It was crowded. Tough to find a parking spot per usual down at Mission Beach, but the
Yeah.
weather was actually like perfect out there. It wasn't too hot. A little breeze coming through, but yeah, there was a lot of people.
Yeah, we just did a beach cleanup there, which was a lot of fun. And we went at like 9 a.m., which was great. And then by the time we left at around 11:30, it was just, yeah, we had to run out of there. Just so many people, so touristy. A
especially
wonderful area, but
especially in the summertime.
especially in the summertime. The man, thanks for tuning in. It is going great over here. And then George is tuning in from Chicago. Thanks for tuning
Chicago,
in.
Chinatown.
Love it. Go Bulls. All right. Next article here. This is a big one. This just came out today. U.S. inflation jumps 9.1% in June to to 4-decade high.
Yeah, 1981, I think, was the last time it was this high.
And I'm not going to go ahead and do all the analyzing of this, but it is very interesting. If you look at, so this graph, do you know what you call this type of graph? So it's showing the percentage change from one year to the next.
Sure.
So this is showing the percentage change in inflation from one year to the next in the U.S. Since 2004, and you can see how much it's progressed in the last 2 years. So pretty wild. This is the reason why the Fed says that they are increasing interest rates, is to get this under control. And it's going to be interesting to see what they do from here. Rates have already gone up a lot this year. They're saying that they're going to continue bringing them up. Now that these new inflation numbers have come out, I think that that's probably the plan.
Yeah, usually when they also, like, if people are kind of already assuming this was going to happen, so sometimes the mortgage rates have already adjusted for the news that's about to come. So you might not actually see rates jump a ton in the next 30 days, but I guess it kind of depends on what they decide to do next. But a lot of times it's already baked into it even before we get to this report. So, and a lot of people are saying this inflation could be the peak of it now, and then it'll start to decline too. So some of these numbers, they're a little bit older by the time we actually get the numbers. So I don't know. I guess we'll find out. They'll do another one of these next month, so we'll see where it's at then. So
yeah, and I think the Fed meets in 2 weeks, and they're going to discuss this and what they're going to do for the rest of the year. I mean, I know all the experts were saying at the beginning of the year that maybe interest rates would hit 4%. So take everything we're saying about what we think is going to happen with interest rates with a grain of salt. All I can say is they've gone up like crazy this year. I mean, if we look at this,
I refied in December at 2.85%.
Yeah,
that was December, which is what, 8 months ago.
Yeah.
So, and now we're at 5.7% for
yeah. So this is showing over the last year. We started around 3%. We both have a lot of past clients that are under 3%. And then now we're looking at it. It topped out around 6%. Now it's at about 5.5, depending on what type of loan program that you're going with. But yeah, I hope that doesn't go up too much more. I think what I'm hearing is maybe up to 6.5 or 7% by the end of the year. I also think the Fed is going to look at what an effect this is having on the housing market, which has a drastic effect, which we're going to talk about here shortly. And I think that that's going to have a big impact on what decision they ultimately make.
I agree. And they might raise it again one more time and then, see how the housing market responds. And then especially if the recession comes, which everyone seems to assume that it's coming or it's already here.
Yeah.
Then, could bring rates down again. Maybe it's not a year from now or 2 years from now, but I don't think rates are always going to be at 6% is my guess. So
absolutely. I mean, even the Fed said the goal is to get us to the point where they could bring rates back down. That's their goal. They want to stabilize the economy. They want to have some type of effect or power on the economy. And then once we get in a better place, bring those rates back down because they want to stimulate the economy at that point. James is wondering, Bern, are you excited for a drop in housing prices?
I wouldn't say I'm excited for a drop in housing prices, although for some clients, I think it'll be nice to get back in there. Some people just got priced out of it completely. Mm-hmm. So I've had a lot of people just go to the sidelines because they wanted to see how this goes. I had one guy tell me he thought his house was worth $2 million at the peak. And he thinks that his house could go down to $1 million. And I'm just like, why do you think he's also the most pessimistic person you'll ever meet? He's a good friend of mine, but he's crazy. Yeah. So like, if I'm like, hey, Matt, if your house goes down to $1 million, I will buy it from you.
Yeah. Look,
So,
there's a lot of people waiting on the sidelines for opportunities, and that'd be great. But,
for sure.
but also keep in mind, if housing prices go down 10%, that doesn't negate the extra expense that you're paying because interest rates are higher. Now, you might be able to refinance in a couple of years, rates get lower, and then you're in a better position. So there could be absolutely benefits to buying right now. But yeah, it's, if they were to bring rates down again, then guess what? The market's going to continue going up. I don't think there's any question about that.
For sure. I mean, are we going to see a little dip here in the next, 3 to 6 to 12 months? We are seeing it, I think. Would you agree?
Yeah, absolutely.
Yeah, because there was a house over by me that was, I swear, would have sold for $1.9 million probably just 4 months ago. Like, without a doubt, I thought it was. It's kind of a little bit of a cosmetic fixer, nothing major, but now they just reduced it to 1,675. So people are like, you're waiting for prices to dip. It's already happening right now, in my opinion. I mean, it's also the homes that are move-in ready and ready to go, I still think get a pretty good premium price. It's those ones that, at least in my experience, just watching houses go around, it's the ones that are like, either they're not total fixers, but that in-between type home, like, oh, it needs a little work, don't want to do the updating, that sort of thing. So it's also neighborhood by neighborhood. I think some neighborhoods are performing better than other ones. And I actually wanted to go through all the neighborhoods that appreciated the most during the pandemic, who had the most bidding wars on them. Maybe they got boosted up a little bit more than other neighborhoods. Maybe they should have been. So I'm curious when I go through those numbers to see how that turns out. So.
Well, you can watch here's a teaser. Great setup, Bern. Teaser for my video release on Friday, which is talking about the best and worst neighborhoods. And we're looking at based on appreciation or increase in home value over the last 12 months. So
that'll be a good one.
All right. So Nick is in PB working towards getting first place in San Diego. How should I wait for a place to sit on the market right now before making an offer below asking? I mean, right now, there's nothing wrong with putting an offer in below asking. Is it realistic? I think you just need an expert to help guide you with that. I mean, getting a buyer's agent doesn't cost you any money. Bern and I were very active in this market, and we both know, or we at least know enough to be able to give you some insight on what you should do or what type of offers you can be making. What I've been telling my clients for the last couple months is probably that wait until a home's been on the market for at least 7 to 10 days before we consider putting an offer under asking. But now anything's on the table. There's no harm. There's no harm in putting an offer under asking, especially if you're going to wait anyways. Just know that it doesn't mean you're going to get it, because the homes that are really nice and competitively priced are still going to sell at or over asking.
Yeah, because I think 10 days probably minimum if you want to see how it feels, unless you really have to have the property. Just see how it goes for the first 10 days and find out if they have any offers.
Yeah.
If they don't, then I think, and my this is just a guess and just an educated guess from what I'm experiencing, I think a lot of sellers are panicking right now.
Yeah, for sure.
So
the motivated sellers are panicking.
Yes, if they need to sell and they need to get it out, I think some people will take less than they think. Even if they just let it sit for a few minutes longer, they might actually get closer to their asking price. But I think everyone's trying to feel each other out. Buyers are trying to feel out sellers, and sellers are trying to get in there before the next house sells for less, so they can be higher than this one. So I think there's a lot of opportunities out there for buyers right now. So just keep an eye on it. You don't have to rush into it. Doesn't have to be this month. Could be 3 months from now might be the best time. And if you're trying to find the bottom of whatever this is going to be, you'll just never find it, because you won't know when the bottom is until it goes back up. So, like I said, my guess before this, when this whole thing started to decline, and I feel like we kind of noticed it before some people noticed it, just because we're out there every week trying to get offers accepted.
Well, we notice it before the numbers come out because we're experiencing it every day.
I know some people think it's going to be like a 3 to 5% dip. I could see some neighborhoods getting 10 to 12% dips, something like that. So I don't think there's not going to be like 50% dips as my crazy friend thinks. But, 10 to 15% would not be shocking for some neighborhoods that skyrocketed over the last 2 years, because we basically had 10 years of appreciation pushed into 2 years.
Yeah.
So there almost has to be like a little bit of a pullback. I mean, it just depends on how much it's going to be, which I don't really know because I'm not that smart. So
Yeah, it was like it's a kind of a springboard effect, right? Like everything shot up so fast. I think, news at the beginning of this year came out that the Fed was going to increase the rates. And so a lot of buyers jumped on, let's get a house now. So we thought, all right, rates are going to go up. So there's going to be fewer buyers out there. But the opposite happened because they were just, we need to get it now. And then kind of the opposite happened near the end of this year. In the last month and a half is where sellers thought, okay, we feel like we're at the top of the market. Recession is coming. We're terrified. We need to sell now, right as buyers started to retreat. So yeah, it was just like this huge springboard of like major crazy appreciation. And then it's quickly coming back down. But how far will it come down? I think I'm very confident, kind of what you're saying. Like I could see it coming down 10%. I could also see it going back up to where it's at right now by January. So
yeah, I mean,
losing 10%, but we're going to get right back there. I'm very confident about that.
I'm looking. I've told this on my channel before. Like I'm actually looking for investment properties over the next 3 to 6 months, just because, like, kind of, I don't want to take advantage of sellers that are panicking, but if it's be greedy when people are fearful and be fearful when people are greedy. So it could be just a good opportunity. Obviously, it's not going to be for everybody. And if you don't want to get involved, like you're too much, you don't like risks, and there's obviously going to be a little bit of risk buying anytime you try to buy a house. But I just feel like more positive about it than negative, in my opinion. So
I agree. We're actively looking for a second investment property to purchase this year. And yeah, am I allowed to say that on this live?
I don't know.
On this live YouTube? No. We are looking we're looking for short-term rentals close to national parks. So the last one that we purchased is in Yucca Valley, right next to Joshua Tree. And so now we're looking more of a lake scenario, and we're still trying to figure out and dial in exactly where we want to be. We have a couple places that we like, but inventory is so low that I don't know we're going to find the opportunities that you're talking about, because like you need to be a little bit patient. You need to have enough properties that you're looking at and submitting offers to in order to get one of those opportunities. And that's what we'd like to do.
Makes sense.
All right. So this is this screen I just pulled up from Reports on Housing, San Diego County active listing inventory. And what you can see here is since 2012, which is when they started really collecting a lot of this data.
What website is this on? I don't have this one.
This is Reports on Housing. This is I can send you it after we're done, but it's a membership-based.
All right, continue.
Statistic. I know it sucks. It is so hard to get good data on housing here in San Diego. Like if you go through our MLS, it freaking stinks. There's 3 different MLSs in San Diego. It's super delayed. So anyone out there that has good resources for data, let me know. Sometimes I'll even go to
InfoSparks. That one's pretty good. I like
InfoSparks, but I mean, usually it's 3 to 4 weeks delayed. And then Redfin has data that you can go off of, but it doesn't seem to be as accurate as a lot of the other sources. But I do use that from time to time. But anyway, Reports on Housing. This is showing San Diego County active listing inventory since 2012. And what you can see here, there's a lot of ups and downs. That's the seasonality of things. Sure. So you're going to see more homes when we get up to the summer months. You're going to see fewer homes when we get into the winter months. It happens every year. But then if you look over the course of the year, did we actually increase or decrease? Well, that changes every single year. So what you hopefully can see here on the right, I know it's going to be a little bit small for you, is just how crazy the inventory shot up. And this is what I talk about on every single live that we do. Like, yes, it shot up like crazy. And if that continues, we're going to have 8,000 homes by the end of next month. But we'll talk about why I don't see that happening. I don't see that happening. Yeah. And remember where we started here. We started in January and December. We had basically 1,000 homes in a county of 3.35 million people. That's all the amount of homes that we had for sale. So now we're up to 4,500. And that's like not even baseline since 2012. And since 2012, we've basically had a seller's market the entire time. So we still need more inventory.
For sure, which I think it will increase a little bit more, but not to the extent that it'll make it. That's why I don't see the housing prices dropping more than that, like 10 to 12%.
Yep.
Again, depends on the neighborhood, but unless we somehow have this, magical influx of houses, then it's going to be hard for it to happen unless home builders build a lot more homes, which they're not doing still. Yeah. So, I mean, we're running out of areas to even build homes over here. So,
yep, absolutely. And, again, going back to what I was just saying, look at what happens every single year. It goes up, it comes back down. It goes up, it comes back down. Some years more drastic than others. That's exactly what we're seeing here. We're going to get to the point soon where I think this shot up. I mean, this shot up faster and earlier in the year than it normally does, more drastically than it normally does. But the normal seasonality of things is near the end of summer. Over the next month or so, we're going to start to see this decline.
Yep. And I think like you said, we felt it too, because a lot of our buyers took breaks or decided not to buy anymore, or they were trying to sell their house in another city and their house didn't sell as quickly, or they took it off the market. So a lot of different factors going into this right now.
Here's another way to look at it. I really like the way that this chart is laid out because it's easy to see year over year.
Chart.
So the orange here is this current year, red is 2021, green is 2022, 2021, 2020 for green, and purple is 2019. So it's going down in the years, the farther up and more inventory that you see. So again, if we're just looking where we're at right now compared to the last few years, it's really not that high. It just shot up so fast and so much quicker than most other years. And when you look at this compared to the other years, we're maybe a month away from seeing this start to decline if we're going to be anything like what happened in the last couple of years.
Sure, yeah. I'm curious to see where that line is in 3 months from now, 4 months from now.
Yeah, absolutely. So we will keep an eye on that. I can also say that a lot of these numbers a lot of these charts that we're seeing here are showing numbers from 2 weeks ago. And I do think that inventory has continued to increase since then. So yeah, we're definitely going to see it continue to go up a little bit from where it's at.
Yeah. I know. I wish we had like active like charts like every single day that could show me where we are at, but they don't really exist, unfortunately.
All right, Nick wants to know, just got pre-approved. Should I lock in a rate today before the end of July interest rate rise? So,
the problem is you got to find a house a lot of times.
Yeah, you have to have an actual address for a property that you have under contract before you lock your rate. There's going to be some type of timeline associated with how long you can lock that rate for, and there will be penalties, like daily penalties, after that date to continue to have that rate. So always talk to your lender if there's maybe a specific situation that you're in. But yeah, ultimately, you need to be under contract with a property before you can lock your rate.
But if you could lock it in, if some bank actually does let you lock it in for some reason without having one, which I don't really know of one, there could be one, but I probably would say yes. But they only let you lock it in for a certain amount of time, so that's the other problem.
And the longer period of time that you're going to lock it in for, the higher the rate is going to be.
Correct.
All right. Hello from San Jose, a guy looking to move down to San Diego. Thanks for tuning in. San Jose.
We've had a lot of San Jose people here over the last couple of years.
Yeah. It's been a big chunk of business for Bern and myself as people moving down from the Bay Area. Go Sharks.
That's the only thing that Dan knows about sports, just so you guys know. So
I know like one or two sports teams names.
You knew the Bulls and you know the Sharks. So that's good.
Sharks. Yeah. That's like a women's volleyball team, right?
Right. Exactly, Dan. That's
exactly. Jamie or Jaime? Right?
Jamie?
Yeah. Jamie is saying to lock in a rate now. Again, it just depends what situation you're in. Like if you're under contract with new construction and it's 6 months out, some banks will let you lock a rate that far out. It's going to be lender specific.
Sure. Yeah. I know I talked about this on my live the other day too, but Mission Fed Credit Union has 10-year ARMs. I think they were at 3.5% for 10-year ARMs, which means if you don't know what ARM means, you can lock in your rate for 10 years. And after that, it goes adjustable. And then ideally within that 10-year period, you refinance to a 30-year or whatever you want to do. They were at 3.5%. I just went on their website now. It's at 4%. So still much lower than a traditional 30-year fixed, because their 30-year fixed rate is 5.625%. So it's quite a bit difference.
Most lenders right now, even if they're going outside of their own bank, they are offering adjustable rate mortgages. And like just let me hold up because I know it's almost like a pejorative or like a negative thing to say when you say ARMs, because we look back at what happened in 2008 where people that shouldn't have been qualified for homes were given these crazy ARMs where they were doing interest only for 2 or 3 years, and then all of a sudden you'd have your payment would go up by like 3 or 4-fold.
Sure,
Like absolutely crazy numbers. What we're talking about here is an opportunity to get an extremely low rate for 7 to 10 years. And in that period of time, it's extremely unlikely that your home is going to be worth less than it is right now. And also, more than likely, it's very, I think, improbable that rates will not be lower than they are right now over the next 7 to 10 years.
Yeah.
So, and how often do people move? That the average is like, I think 7 years, is it not?
So they say 7 to 8 years usually. So
7 to 8 years.
but everyone's different. Do what's right for you. If you're terrified of ARMs, don't do an ARM, or just don't buy a house right now and wait till rates come back down again. So, but if you're like financially savvy and you're on top of these things, I think it's an excellent opportunity. So,
I think if you know that you can afford it, whether it's an ARM or not, then that's a good situation to be in. Like, don't ever put yourself in a situation to where, you know, you're going to risk losing your house. So just make sure that all the numbers make sense. You know, it's more than just, hey, get a little bit of a deal right now. If that's the only way you can make that deal work, then it's probably a bad idea. But if not, and you can stash away the $500 or $1,000 or whatever you're saving every single month for the next 7 to 10 years, and put that towards your mortgage or put that towards buying your rate down or refinance during that time and use that money for an upgrade on your home or another investment property or whatever it is, there could be a lot of good in that.
and you know what I hate what other real estate agents do? I just want to vent about real estate agents for a minute. Even though we are real estate agents, when people say, you know what your interest rate is on renting, or 100% or whatever this is, I hate
It's so bad.
And you know, and like, you know, 20 years ago, the interest rates were 15%. Like, yeah, the house was also $100,000 instead of $1 million. So it's just, they just give real estate agents a bad name when they bring up all these things like that. You can't compare the two. They're completely different time periods, completely different prices, completely different interest rates. So whenever you see a real estate agent quote one of those things, just punch them in the face.
You know what? Okay, so
that's insane. So
I love that, and that's why we're friends, Bern, because we're not coming on here trying, like, look, if anyone watching needs to buy or sell a home, Bern and I would love to help you. We work with great people because we put out what we think is valuable information. We're not actively trying to sell you on anything. We're just trying to give you the information. We're taking time out of our night to be on here and chat with you guys. And so we're kind of in the same mentality of, like, when we look at what other real estate agents are doing to try and get business, and when they're being extremely cheesy and salesy like that, I can't stand it. However, Bern, I will say one of the things that has always peeved me off more than just about anything is when real estate agents just talk over and over and over again about how it's the perfect time to buy a house, the perfect time to sell a house. I really don't like saying that I've probably never said that kind of thing before. However, I will say right now, if I was in a situation to where I needed to sell a home in the next 6 months, I would probably do it right now. Do you agree?
yeah, I mean, I would. It's just there's so many factors that actually go into it. Obviously, if you had to do it, then I would. But if you didn't have to, then I would, you know, see how things turn out. I think prices are going to dip a little bit more than they have right now.
Yeah.
So again, depending on the neighborhood, but there's also opportunity in this too. So you just got to kind of see what's your plan for the next 5-10 years too. So if it matches up with your plan, then do what you need to do. So I just think it just depends on the person and your situation a lot of times.
All right. Dude Flynn says, I think the economy is going to hit hard next fiscal year. And unfortunately, people who can't afford their homes will have to sell. I think it's just the start of what's to come. Could happen. Yeah. I mean, inflation is real. There are a lot of people that just can't afford what they're doing right now. I think if people have owned a home for more than 2 years, 3 years, there's so much equity built in right now at the current value of homes that home prices would have to come down. It's such a crazy. I mean, San Diego median home price went up 20% this last year. So that means if they've owned a home for only 1 year, then home prices would have to come down more than 20%, which I just don't see happening.
And like the other thing is like a lot of these people could afford these homes because the lending rules are much stricter than they were back in like '08.
Yep.
So yes, maybe their home would decrease in value a little bit, but they can still afford the loan. And then less people start really losing jobs and that sort of thing. But people are still spending money, even with inflation going up. People are still traveling. So, and companies aren't laying off that many people. There are certain companies, I've seen some real estate companies lay off people because they're just kind of trying to prepare for it. But overall, there haven't been a ton of job layoffs, at least not yet. That could change in the next 6 months. Who knows?
For
Especially
sure.
when the recession actually physically happens. But I don't know. I'd be interested. I'm hoping people don't lose their jobs and lose their houses, but you know, after 2008, anything can happen. So
I can say this: over recessions happen, and out of the last 4 recessions in Southern California, only one of them resulted in home prices decreasing over the term of the recession, and that recession was caused by the collapse of the housing market.
sure, yeah.
So, I mean, look, we're both saying we think home prices are going to probably plateau and go down a little bit this year. I mean, we're seeing it. There's a lot of price reductions happening. But over the long term of this, recession over the next couple of years,
Yep.
I think we're going to get out of it. In fact, I would bet money that we're going to come out of it with housing prices above where they're at right now.
Well, that's typically how it always goes. I mean, even when there is a price decrease, they end up going higher than they were before. I mean, it might not be, it could be 4 or 5 years from now before it happens again. And rates will have to come down for that to probably happen again as well. But typically they don't. If you look at the chart, you'll show like home prices, they go down when there's like a recession or some kind of housing decrease. And then it goes higher than it was. It's like the stock market too. It goes down and then it goes higher than it was before. So that's probably what's going to happen again. Again, there's much smarter people than we are out there forecasting this stuff. So we're not economists. We're just real estate agents here in San Diego that kind of just see the trends going on. So
I also think we're getting to a point where, at least here in San Diego, for most people, unless you're willing to get a condo or really a starter property, that like you can't just have a job that pays well. You have to have money come in some other sources, some investments, whatever else you have going on. Maybe even pull from your 401k. There's ways that you can utilize things like that. So yeah, I mean, it's tough. There's a big part of me, and I know a big part of Bern, that would like to see housing prices drop enough so that people can have more of an opportunity here. But ultimately, it's an inventory issue. That's what we're not seeing a resolution for. It's an inventory issue. We need more homes.
That's true. Yeah. And I think a lot of, like Jamie just said, prices are dropping fast. I mean, you're seeing price reductions, but basically a lot of people were basing housing prices off of 3% interest rates. Like they were looking at what sold 3 months ago and then using that as a comp. So are prices dipping? Yes, but I think they're just mispricing them as well a lot of times.
A lot of people selling today first met with a realtor 3 or 6 months ago.
Right.
They've already talked about how hot the market is. They've already talked about where they should price their house. And so when they finally got to the point where they're selling their house, they're saying, well, what do you mean we need to list it down here? You said we're going to sell up here. And so it's really, really difficult in those scenarios as a seller. And I know because like we've obviously helped people sell homes. We give that advice. But when you're actually the seller and you're in those shoes, it's hard to feel like you're giving up money. So that's what we're seeing a lot of. People were trying to get top dollar and then they waited too long to make adjustments. And that's what we're seeing.
Yeah, and I actually had a client reach out to me. This was maybe like 3 weeks ago. He had a house in Oceanside, a beautiful house in Oceanside with an ocean view, a little bit inland, but still had an ocean view. And he had it listed it for 1.7. And I think if it was like 2 months earlier, he would have sold it for 1.7. And he was actually hoping to get 1.8. And he's like, "Hey, I'm going to cancel with my agent. Do you think you can get up to 1.8?" I'm like, how many showings did you have? He's like, "We had 5." I'm like. And I looked at the comps, and I'm like, there was one that sold for 1.6 without the ocean view, and then this one, I'm like, if this was 3 months ago, I would say we could have. Like, I think I can get you 1.7, but I don't think I can get you to 1.8. So I was just trying to be honest with them. I'm not trying to sell them like, do you have to use me to sell your house? But it just, when the interest rate went from 3 to 5, the affordability of that one just decreases. So it's just kind of what's going on in the market. So. And when people are trying to, like, if you're going to sell your house in the next 3 months. Don't use comps from 3 months ago. So that's just use the last 30 days and what's actually in escrow at the very moment. Otherwise, you're going to be disappointed, I think.
Yeah, it's tough. And that actually brought up a good point, because when you're looking at comparable properties that recently sold, let's say it sold 2 weeks ago. Well, they had an accepted offer, at least a month and a half ago, and they probably had offers for a full week before that. So you're talking, that's 2 months ago that they got that offer. That was at the peak, the very tip top of where the market was at. So it makes it challenging, because you can't, homes that are still in escrow right now, if they just got an accepted offer a couple of days ago, they're not going to show online what the accepted offer is at. Sometimes if you have an agent that's a sweet talker, which I know Bern and I both like to do, is we'll call up that agent and just say, hey, do you think you could just maybe give us some insight? Because this market's so crazy. We could use any info we can for this listing we have coming up on the market. But it makes it tough, man. There's, again, the data is delayed, which makes it tough to know exactly what's going to happen when you put your house on the market.
Yeah, just look at what's pending. And tell your agent to go call the other agents around and see if they'll tell you at least the ballpark of where you're in escrow at. Some won't tell you no matter what. Some, they have to get permission from their client to tell you.
That's right.
But sometimes if you don't ask, they're definitely not going to tell you. So just make sure you're checking on that too. So
Facebook user, hello, Sunny Boys. Apparently, I have to fix something on Facebook so your name shows up. Yeah. So if you get this, let us know who this is. We'd love to know. Nick, thanks, guys. Well, thank you. Thanks for tuning in. Thanks for chatting with us. We got a lot of people on here. We're getting a lot of engagement. We'd love the questions. Keep them coming.
Yep, credit unions, good place to check out. Sometimes they get better, especially for whatever reason right now. They're getting better rates than some of the big banks or even some mortgage brokers. Yeah,
let me see here, Bern. You keep talking. I'm going to try and pull up some information here real quick.
Okay.
Keep the people entertained.
What was that?
So keep the people entertained.
I will. Should I do a dance or something? What should I do? So what else am I seeing? So I've also seen there was an article that showed up this week that a lot of people are canceling escrows. Have you read that too?
Yes.
Which I'm not surprised by. Everyone's panicking, and they're think, oh, maybe if we just cancel and wait a couple months, we can get a better deal. So it's possible, or it's possible you get a worse deal, but like I said, if you're trying to find the bottom, you rarely find it. So just.
All right. So here's, hopefully I have it here. Damn. Okay. I don't know who it is. I have a client that's closing on 3 Roots next week. We're talking about credit unions. We're talking about getting low rates. There is another credit union that I would need to pull up the information. So if you want to know who it is, just reach out to me. I'll let you know. They have a program going on. I think it's specifically for 3 Roots, but all you have to do is open up a checking account with them, and they'll give you, I think, somewhere around $8,000 closing cost credit and a 30-year fixed at just an unreal rate. So credit unions, they just have more flexibility when the rates are going up really fast. Eventually, their money is going to run out for those programs, and they're going to end up where everyone else is at. But right now, you can still get a lot of really good deals.
Yeah, definitely. I was reading on Reddit something about that too, so it was on there about 3 Roots. Also, I have someone in 3 Roots trying to resell a property that he bought in 3 Roots. So if anybody is looking for
really?
Specifically a Brio model, which is California West, it's 2,500 square feet. So he bought it, and he was supposed to move here for work, but now his work delayed his move for 2 years. So he just deciding to sell it now. And I think they're selling the models for Brios at 1.9 or higher. And I think he was trying to sell it for around 1.7. So it's actually a pretty good deal. So if anybody is interested, let me know.
All right. So Jamie says it's Jamie. Or maybe he's trying to phonetically pronounce it, but it's the same spelling. So I don't know.
Oh, Jaime with Jaime.
Okay, yeah, I think you're right. Jamie. What? If we're wrong, let us know. Sorry. Sorry, Jamie. This is what you just get brain farts sometimes when you're going live. Ricardo. So if the rental market lags the housing market, then we should expect rent skyrocketing to continue. Again, it comes down to an inventory issue. I think we do have a situation where we could be seeing a lot of current Airbnbs turn into long-term rentals. I mean, we could potentially get hundreds, if not thousands, by the end of the year, early 2023. But that's still not enough to really bring down prices. Inflation is crazy. That affects it. Yeah, it's tough, man. It's really, really tough here in San Diego, whether you're looking to rent or to buy. It's a sacrifice to make to live here.
Yeah, for sure. I was talking to a property manager yesterday about this whole short-term rental thing, and he owns a property management company that does short-term rentals. I'm like, what do you think is going to happen? He's like, if they, a lot of people are doing, especially in San Diego, a lot of people do 30-day rentals for longer stays, or 5 weeks, 6 weeks, especially like in the summertime here in San Diego. People come here for vacation. So even if you don't, for some reason, are not able to get that short-term, like, 2-day rentals, 3-day rentals here in San Diego, some of them might just turn to 30-day rentals.
Sure.
So that could be a possibility as well, because San Diego is a very, very big vacation destination for people. Honestly, well, 30 days is a very long vacation, but people still do it, especially in the beach communities. So don't get upset if you don't receive at least not too upset about not getting the short-term license rental. You still have other options as well.
Yep. House hack: if you live in the property, then you can rent out some rooms or different units on short-term rentals. Last slide I wanted to pull up. So this is San Diego County expected market time. And this is looking at how many homes are currently on the market and how long it would take to sell all those homes based off of current demand, and how many homes are being sold every day. So this is something that we look at to see if we're in a buyer's market, if we're in a seller's market. There's clear-cut numbers that we can look at that show us with the data if we are in a buyer or seller's market or neutral market. So again, over here on the right is where we're at, a sharp incline. I can tell you again, I think this has gone up from where this is at, but eventually it's going to plateau and come back down. But this is interesting because at the beginning of the year, the expected market time was below 20 days. Mm-hmm. And what that means is 50%, if not more, of the properties that were priced right and looked really nice sold within the first week. And then 50% sold within like 2 or 3 or 4 weeks, or maybe some even sat on the market for a while because they weren't super motivated and didn't have an attractive price. But this is interesting. I mean, if you look over the course of the last 10 years, we've seen a lot of ups and downs. We're getting close to being a balanced market, but we're not quite there yet. Is that what it feels like to you right now, Bern?
Yeah, I don't think we're there yet. I think we're moving in that direction. But so what is it? 6 months of inventory is supposed to be balanced, is that what we said?
So 90 to 120 days. So 3 to 4 months is going to be a neutral market. Okay. Anything more than that is going to be a buyer's market, and anything less than that is going to be a seller's market.
I think it depends on the house a little bit right now. I think in another month or two, maybe we would be much more balanced, but we're getting close. It feels like it is. I feel like the power has almost gone toward the buyer lately, more so than these numbers are actually showing, in my opinion.
Yeah, I think so.
Because a lot of times we say these numbers are like a month behind sometimes, so which is annoying.
Yeah, it's very annoying. Yeah, and let's see. So James says 3 Roots still selling like hotcakes in new builds in general. I would say new builds in general in San Diego are not selling like hotcakes. 3 Roots in particular had such a long wait list of people wanting to be there. It's so centrally located. And I think, I could be wrong, but I think over the last 6 months, they haven't increased their prices on their properties as much as they probably could have if they really were getting greedy. So yeah, I think they still have a lot of demand. They sold, I think, 600 homes so far at this point.
Yeah, I think it's settling a little bit. That's my feeling.
Definitely settling. Yeah.
From what I've heard, I even saw some. I think it was the Citrine. There was a price reduction on the Citrine properties. I forget which one it was. One of them I saw something that actually got reduced. So I think the single family homes will probably be in pretty high demand. Sometimes I think the townhomes, maybe, even though they're the lower price, you think those would be more popular. That you might, we'll see what happens over the summer, but we'll keep you updated on those.
I can tell you, actually, just to go back real quick, I can tell you I'm getting more emails and more communication from builders now than I have over the last 2 years.
Yeah, they're returning phone calls and stuff too. Like
returning phone calls. There's a lot of interesting things going on right now. All right. Average 10 to 12% is reasonable. I'm assuming he's talking about home prices decreasing, and should be able to find some houses with more than a 20% drop. Yeah. Absolutely. I don't think you're going to find that. I don't think you're going to get an offer accepted at 20% under asking right now, the first weekend a property hits the market, but some are way overpriced. That absolutely is possible. What I would say is look for homes that you can get the best return under value, not necessarily what it's listed at, because you have sellers that are all over the place right now. You can have a home like Bern was saying in his neighborhood, a home that was listed at 1.8, or you could have it listed at 1.6. So 20% drop off of both of those prices is going to be significantly different, and it's the same house. So yeah, there are deals to be had. You just got to kind of look at it in the terms of what's selling in this neighborhood, where should this really be, and then where's the value that I'm getting underneath that.
Yeah, don't worry about like just getting under 20% under the list price. Get it 20% under value. Like what was the last one that sold in that neighborhood? Similar size price, similar size house. And if it was a million before and you can get it for, I'm not saying you're going to get it for 800, but hypothetically, if the last one sold for a million and this one was listed at 850, you could obviously that's $150,000 less than it was before.
Yep.
I'm not saying that's what's happening right now, but don't just worry about what it's listed at.
Zun also said getting housing prices being back up in January is a little bit unrealistic, and I can totally understand like that thought process. I could absolutely be wrong. I can tell you this: I have had probably the least amount of buyers reaching out to me over the last month or so, and I was talking to a transaction coordinator who's someone who processes paperwork for agents. Her plan was, or her projection was, to do 100 deals this year. She has 10 different agents she's working with. She's only doing one transaction right now. So things are slowing down. There's no question about it. However, anecdotally, and I don't know if this is for you as well, Bern, over the last week, probably week and a half to 2 weeks, I've had more buyer leads reaching out to me that are interested in buying in the next 1 to 6 months than I've had in months.
Yeah, I think this last like 7 days, I've had 4 or 5 people reach out about it. So I just think people are just paying attention now that the prices have dipped a little bit. They're waiting for that moment to jump back in. So you don't
People are
want to be the
interested.
one to jump back in. So just keep an eye on it, do what's right for you guys, and you'll be fine. But just don't expect catastrophic 50% decreases in home prices. So
Yeah, I think if prices came down by 10% in the next 3 months, I know I'd have at least 10 to 20 people picking up the phone and calling me that I was chatting with months ago that decided to hold off on buying, that would call me and say, Dan, this is awesome. This looks like it's a good time. I want to get back into it. So I think there are a lot of people with money waiting on the sidelines that were just worried about buying at the top of the market, and they could see that as a potential opportunity. So only time will tell. Interest rates will definitely affect it as well. But yeah.
And like I said this before too. You can't sell your interest rate. So like people were always worried, like, oh, I want to buy just because to get the interest rate. Well, if rates go up, you want to sell that house. You can't sell the interest rate. You can sell the house. So everyone's like, oh, I would rather have the lower interest rate than a higher priced home, or vice versa. Just look at it that way. So
Yeah, how about get it as prices are coming down, as you can get an opportunity, get that property tax lowered.
property tax lower, then you can refi later.
That's right.
So
Ding, ding, ding.
that's right.
Zun, you are very welcome. Thanks for tuning in. How accurate are Zestimates? Bern, I'm going to let you handle this. This is
they're super accurate. You should go by them all the time. I would say sometimes they're accurate and sometimes they're not. Sometimes you can hit a dart and hit the middle, and sometimes you don't. So I remember I always use this one. The CEO of Zillow actually sold his house for it was like $1 million less than his estimate. So I don't remember the exact numbers, but it was way off. So I would say it depends on the neighborhood. Sometimes I think in the neighborhood that all the homes are very different, they're gonna be way off. In like a track home, they're probably closer to being accurate. But they also don't know what the house looks like inside. Like it could have been remodeled.
Upgrades you've done.
They don't know that. So I would say sometimes they are, sometimes they aren't. But I would say, but don't go by them as gold, especially in this changing market that changes daily.
Yeah.
So I would say right now they're probably less accurate than they usually are.
It's a fun starting point, right? Especially if you own a home and just kind of have a general,
Yeah,
just
it gives
want
you
to
a general
know
idea.
what value it is. Like it's fun to go on and look at Zestimates and the Redfin estimate, which can both be off from one another by a significant amount at the same time.
Sure.
The other thing that I always think about with Zillow and Zestimates is they decided to buy homes at the beginning of the pandemic. Their goal was to buy X amount of homes. They spent millions or billions. I don't even remember at this point.
A lot of dollars.
Yeah,
Yes.
I'm pretty sure it was in the billions now that I'm thinking about it. And they ended up they lost a ton of money on that. And they had to lay off a third of their workforce because they were mostly using their estimates as estimates to buy these properties. And I think what they were learning was, and a lot of the properties that Bern and I saw that they bought in San Diego were, it kind of makes sense on paper that a property would be worth what it's worth, but then there'd be something kind of unique about the location of that specific home, or something that's like not really easily changeable that drastically brought the price down. That's kind of what I was saying.
Like they're saying it's in the same neighborhood. One's on a busy road, one is not on the busy road, and they were trying to give it the equal value, or one had power lines right behind it, and they were trying to give it equal value. It's like things you can't just tell by putting it into a computer.
Yes.
So you actually have to put your eyes on it, and they were not doing they weren't doing that. So it's a hard way to run a good business, as you could tell from Zillow, since they stopped doing it. So.
Yeah. And here's the crazy thing about that for me, Bern, is that was one of the hottest markets ever in the history of San Diego. And they still couldn't figure it out. They still were losing money. Like I think what they found too is when the market would make a micro adjustment, then they're using old data. They're trying to predict what's going to happen, and it just didn't work out.
Yep. I agree. I actually had clients, like I told them to like target Zillow homes because I thought you could get better deals on them. And
yeah.
I had 2 clients that bought them last year. I thought they got incredible deals on each property.
Yeah. All right. So we have Ms. Joy's. Sis is only looking to buy in the UTC area. What percentage do you think that this area will drop in the next few years, if any, or go up with all the new construction there? Great question. That's a really interesting area. The trolley line just recently extended up there. You have colleges, you have a lot of healthcare jobs. You have the mall up there. You have the proximity to the ocean. That's one of those areas that I think is going to hold value very, very well.
It's one of the safer spots to buy in all of San Diego. I guess it's very central, like you said, close to La Jolla beaches, close to all the businesses, the schools. If like you're looking for an investment property, it's probably one of the safer spots to be. Could there be a little dip there because everything's kind of dipping? Sure, but I think it's probably gonna be less than most, in my opinion.
Yeah, I agree. Spot on, Bern. Spot on.
Spot on.
Good what job. About rental prices? Shouldn't rents drop along with property values? What do you think, Bern?
I mean, theoretically, they probably should, but as a lot of people have gotten priced out of the purchasing homes here in San Diego, they're moving to rentals. So
exactly, that's the point, right?
Another supply and demand thing. So if people aren't buying houses, they're renting, and you're gonna have to live in one. You either own one or rent one, or live in your van. So I don't see rents dropping. There's Merge 56 is over by my house, the new shopping center and housing area. They're having 3-bedroom townhomes renting for between 3 to 4 bedrooms, $4,500 to $6,500 for a townhome that was like 1,700 square feet.
Yeah.
And so, I mean, I thought it was overpriced, but there's a lot of companies around here that people need places to live, especially maybe they're not ready to buy a place. Yeah. So someone's renting those places. I don't know who it is, but probably more tech companies, biotech, all that sort of thing. So they probably should go down. I just don't think they're going to, much at least.
Yeah, I what you said in the beginning, it just makes a lot of sense. I mean, if you can't afford buying a house, you need to rent. And there is this inventory issue. It goes back to the inventory issue. We don't have enough homes here in San Diego. So I don't see. And the other thing, someone commented earlier, is rental prices are usually lagging from what the housing prices do. Sure. So whatever happens now with homes, you'll probably see it around 6 months from now in the rental market. So it's possible we could see a little bit of a dip there. But I think that I can tell you this. We used to be in San Diego in a place where you can buy a house with 20% down. You can use that as an investment property. You can rent it out on a yearly basis to people. and you can cash flow, which means that you are getting some type of money in. You're net positive on that investment. Right now, for most properties in San Diego, especially if you're looking at a single family home or a condo or a townhome, you'd be lucky if you even broke even. Usually you're going to be like 25% under, which means if your mortgage and all your expenses is $5,000 or let's say $4,000 a month, then you could probably only rent that out for about $3,000 a month. So it makes it really challenging. I did a breakdown of this in my video about why Airbnb's investing is dead in San Diego. The reality is a lot of people move to short-term rentals because they had an opportunity to rent those at a better rate, make actually some type of cash flow. With rentals, I don't know. It's a tough thing. I wouldn't buy, for most places in San Diego, I would not buy a single family home as a strictly investment property unless everything made sense, and it'd be hard for it to make sense here in San Diego.
Yeah, I mean, I can actually see the home prices go down more than the rental prices go down.
Yeah.
So maybe rents could dip 5%, but if the houses dip 10 to 12%, you're still, it's not going to be as much of a dramatic decrease. That's just my guess, though. I don't know. Do you think differently?
No, I agree. I think that makes a lot of sense. All right, cool. What else do we have here?
Same this year. Oops.
All right. Hi, Dan. Really like your show. Thanks, FM family. I appreciate that.
Like your family, Dan? I feel like someone from your family.
Yeah, this is my mom. No. I will move to San Diego next summer. Any advice to buy a comfortable house in Temecula versus buying an affordable small house in San Diego? We will work at the naval base. So there's, I'm guessing naval base Point Loma is probably where you're going to be at. And
that's a hike from Temecula.
Was that?
That's a hike from Temecula.
It is.
Yeah,
quite a hike from Temecula. So I know I've worked with many military members that do that commute, especially if they only have to be there 3 days a week or something like that. But it's a long commute. And the other thing to think about is, one, Temecula is not nearly as affordable as you think it should be for going that far out of the city.
It used to be, not as much anymore.
Exactly.
Like everything else used to be. So,
and at the same time, the values up there are not going to go up as quickly as they are in the city of San Diego or even at the suburbs around the city. So you can still find affordability that is much closer than Temecula. Maybe the homes won't be quite as new. Maybe you'll be a little bit older of a neighborhood. But yeah, I would say more than likely the response would be that it would make sense for you to find something closer because that commute's just going to be really, really tough unless you absolutely want a newer home that's all you can afford and you need X amount of bedrooms for your family. Then maybe it would make sense.
Yeah, I mean, Temecula is quite nice, but if you have to deal with that traffic, it could be just spending hour and a half in the car every day.
It's also very hot.
It is hot.
It's very hot.
They got great wine though up there, so it's good.
They do have great wine. Yeah. All right. I know Dan has strong feelings on certain builders. How about KB Homes in Meritage?
Meritage. Yeah.
Meritage? I've actually never worked with Meritage. Have you?
I've showed them before. I've never had a client buy one, I don't think. I think they're up in I think they're Oceanside, San Marcos, I think, is Meritage up there.
Oh, yeah. Uh-huh.
KB Homes, my brother-in-law lives in a KB Homes, and he's nothing but good things to say about it. No issues to my knowledge. So they've been good. There's not a ton of KB Homes. I think there's one in Escondido that's doing this KB Homes.
And they're kind of in the outskirts of San Diego.
What's that?
As far as the sites that I've seen for KB Homes in San Diego have kind of been in the outskirts.
Yep.
So like Valley Center and like Escondido, like really getting pushed out there for whatever reason. The only thing I know about KB Homes is that I think they're a little bit more of an affordable builder as opposed to like more of a luxury builder. So, so that's all I know.
Toll Brothers is like a little higher end, although we don't have Toll Brothers much here anymore, from what I've seen.
Toll Brothers is building a $250 million project in Little Italy, which is going to be
really like condos,
apartments, and long-term what do they call it? Extended stay hotel rooms.
Oh, really? Toll Brothers is?
Yeah. And they do have some stuff in San Diego, but it's pretty hit or miss. What are the most common builders that you see in San Diego, Bern? I would say Shea, Lennar, or for
Lennar,
sure.
Shea. KB I see occasionally. Who else do I see a lot? Lennar is probably the biggest one. When you say that, that's the biggest one over here.
Yes, unfortunately.
Yeah. Shea, California West. I've seen a little bit more recently.
That's true.
KB. Who else am I seeing?
And then there's just some smaller builders here and there, but those are the main ones that I see.
Yeah. What's it called? Pardee, which is now a different name. I can't remember their new name. And they've always had good ones, but I think they did most of Pacific Highland Ranch, but I think they're almost done building there now. So.
Mary, I think you accidentally clicked on the wrong channel. We don't need more people here in San Diego. Look, I just think we need the right people here in San Diego. I think this is a beautiful, a wonderful place to live, and anyone with the desire to live here that really wants to fight to make it work should be able to live here. And I don't think there's anything wrong with that. We definitely need more homes. We need more infrastructure, and it absolutely adds challenges, but I don't know. I'm pro change. That's just how I feel.
Well, I mean, this change. There will be people coming. There will be people going. This obviously San Diego is not going to be for everybody, and that's fine. But this is where I want to be, and this is where I want my family to grow up. So as long as I can do it, I'm going to continue to do it. So
living our best life,
That's right. Best life, San Diego. That's what they said.
Bern, I did not realize we must be having fun because we are a full hour in.
1 hour in. Here we go.
So we have 4 more comments here. If anything else comes in, we're going to burn through these real quick. Thank you guys for tuning in. We got a lot of people tuning in and commenting today. So I like that. We're going to do these more often. We always say that, but we're really doing it more often.
They must know I was going to be on the show today. That's why.
They must have. They liked you in the thumbnail today.
Yeah, right.
So LJ, if you ride a motorcycle, you might be able to handle the commute. I think they're talking about from Temecula. I actually, almost every time I've worked with military that are looking in Temecula, they have a motorcycle. So yes, that's true. It's just sketchy. It's a long drive on a motorcycle to be going in between lanes on the freeway.
Sure.
But hey, you do you. Temecula to Point Loma would take 2 hours. Not on a motorcycle, I guess I will say.
That is true.
Yeah, at the wrong time of day, it could take 2 hours. No traffic, it probably would be about an hour. Why, unfortunately, on Lennar? So they're probably the number one builder here in San Diego. They also happen to be the builder through the experience of my clients that they've had the lowest level of service, the lowest level of quality of building materials, the most problems. I've had clients that have purchased Lennar homes and love them, and they've been fine. But I've absolutely seen way more people complain about those items with Lennar than any other builder.
Yeah, I mean, I've had people have good experiences. I've had people that have had bad experiences. They do, if something does go wrong, they do have pretty good customer services trying to go fix them. Sometimes it takes longer, but that might be for all builders too. So.
And Kavina, if you work for Lennar, then I didn't say any of that. I was just joking. 2-bedroom townhome in La Jolla next to UTC for $1 million. It sounds about right.
It depends on how big it is and what condition it's in.
And how new.
Yeah. Not too far off that.
Yeah, I mean, in townhome versus condo, there's a lot of condos over there. So if you actually get a townhome, there's no one above you or below you. More than likely, that's going to be way more demand for something like that. Hold its value, I think, a little bit better. Sean says, well, they all suck, but Lennar sucks. So there you go.
All right. Thanks, Sean.
If Sean says it, I believe it. How much is the HOA? I'm not sure. Do you have any idea what that's?
On which one?
I don't know. I didn't see anything else that John said on here.
Is he talking about that La Jolla townhome?
Oh, yeah. Let's find out. The La Jolla townhome. No, I'm not sure. Bern, I drove behind you the other day. No license plate. Oh, my goodness.
You should have said hi, Matthew. I know we're in the car. But.
Sorry, Bern has a Tesla, so he wasn't actually looking on the road. He was probably like had his computer out. His car was driving itself.
Maybe I was. So,
all right, Sean, just a couple more here. Sean says, I guess it's better than a Cornerstone or Brookfield. Yeah, we do see Brookfield as well.
Cornerstone, I will tell you, I don't know much about. I've seen their houses and stuff. I'm not sure the quality of it or whatever. But I had the rudest salespeople ever at Cornerstone. So,
wow.
I'm just going to say that.
In that specific office that you went to, or just the
big
whole
one. This was up in Carlsbad. I don't. They've all sold out of these ones, so she's not there anymore. But she was like the least friendliest salesperson I've ever met. So.
All right. So Shelly over at Cornerstone, she is the worst. I'm just kidding. I just made it.
I don't remember what her name was, but she was super unfriendly.
All right. What do you guys think about buying a 55 plus as a rental property? Can it be done? Yes, it can be done. As far as I understand, you only have to be over 55 and meet the regulations to live in that home. No one can block you from purchasing a home in a 55 plus community. Is that your understanding?
You have to rent it to a 55 plus person.
Exactly.
Right. Limits your pool a little bit, but you can just as easily rent it out there. Usually, you have to check the HOA rules and all that sort of thing, but they can't prevent you from renting it.
Marisa says the HOA was $490. I believe that's what she's referring to.
The UTC one. Yeah, I mean, it's hard to find like condo HOAs. Like, what's the average you see? Usually 400 to 500 now these days. So 490 is a little bit on the higher end, but kind of depends on the amenities and that sort of thing.
It depends what you're getting on it.
And how old the building is. Sometimes the older buildings have higher HOAs because they've had a lot of upkeep to the building. So
yep. All right, I just have 2 more comments I'm going to pull up here real quick. What are the best seller strategies to reduce contract cancellations? Great question. I think it really comes down to a lot of things. Number 1, just make sure you're in a situation where you could get multiple buyers. And that comes down to pricing strategy. If you price it at a point where you can bid it up a little bit and get a couple people, bidding on that, it doesn't have to be a bidding war, but if you have multiple options, that is going to be the biggest key for you. And then number 2, I think as a seller, you just can't be too greedy right now. For the longest time, it's multiple counter offer every offer that comes in. Get them as high as you possibly can. And right now, maybe that's not the right strategy because you're pushing them so hard that they may end up backing out and falling out. So
yeah, I think buyers are thinking like, oh, I can just find another house. And that's because the market's shifting a little bit. So just don't take advantage of buyer. I think buyers are pissed off, honestly, a little bit after the last 2 years. Like the sellers were really handing it to people for the last 2 years. And now they're almost like, I'm not saying they're enjoying it, but I think they're using it to their advantage now.
Yeah, for sure. Kavina says, no worries, not related to Lennar whatsoever, but I was looking into them. Perfect. I'm very, very happy that you don't work there. I don't want to get in trouble. All right. All right. We have other questions coming in, but we can't keep up. And Bern has a lovely family he has to go get back to eat some dinner. So Bern, I really, really appreciate you being on. I will put the link to your channel down in the comment section below. If you ever are looking to buy or sell a house in San Diego, reach out to Bern or myself, whichever one you think looks a little bit better and cooler and more fun to hang out with, which is probably me, right, Bern?
Suspects. You're suspect.
Awesome. I appreciate you, Bern. Have a great night, and we will be live again here in the next week or 2.
Sounds good, man. Thanks for having me, man. Appreciate it.
All right. Bye, everyone.